All right, so good evening to all our mentorship traders. This is Friday evening 9 p.m. session. As always, we are on the 23rd of October 2020, and the first few minutes we're going to talk about the index and few sectors, prospective stocks. I have the Nifty and the Bank Nifty chart open in front of me. I will be zooming out on the Nifty. Let's look at the weekly time frame. Nothing much to talk about here. We are in a well-defined structured uptrend, and the index is slowly but surely dragging itself further up towards the previous high of 12,500. Yes, you can notice that some degree of divergence is definitely shaping up here with the price momentum relationship here, which means that this move might be slowing down and 12,400, 500 may not be reached in a hurry. We will see that. The most important chart I would think is this one, and the 75-minute time frame. This is the daily chart which I had created a couple of weeks back, and this rising red channel is holding the prices down. For one, couple of times it has proved itself exceptionally well. Number two, the psychological level of 12K is working pretty well on the Nifty. So I have this small horizontal resistance zone drawn up there. On the downside, we have supports coming in at 576.20 kind of levels. Now these kind of combination of levels will be far better if I take you down to the 75-minute time frame. A lot of information coming in from this time frame. So number one, we are within this rising blue channel. The only time prices took out this blue channel was day before yesterday's sharp afternoon sell-off, after which it equally bounced back. This one. Apart from that, the index is in a well-defined uptrend and well poised within this rising blue channel. Number two, it's hovering at the lower end of the channel, which means it is vulnerable for a downward break. The 12K resistance zone is up here in the red mark. Now, if you allow me, you would have noticed by now that the index is in a well-defined ascending channel, something like this, right? Which means we are heading towards a breakout. This is a good sign for the bulls. I say that this is a good sign for the bulls because 12K is an important psychological level, no doubt about that. And before prices take out an important psychological level, it's always good that it takes its time to do so. Gain some stamina, some breath, and then once it breaks out, it will give us a confirmed breakout. So this consolidation right beneath a well-defined resistance is a good sign, provided it has got enough momentum and provided it has enough impetus to break out. If not, then we might get a flip down. Of course, you would have noticed on the top there are multiple retests of 12K, which will take a shape like a double top, triple top kind of a situation. So any dip down, any failure to break out, and if the prices come down, then there are multiple supports, especially this zone, the 11,550, 11,600, 620 zone will, I think, definitely will act as good support. Will this be the time when the Nifty consolidates and takes out 12K? That needs to be checked. But I see generally, whenever I've noticed prices consolidating right beneath the resistance, it always tries its best to take it out, that is, break above the resistance zone. So it'll be interesting to see if the index does so sometime soon. then which are the sectors and which are the stocks that will help the index to break out. Before we go to that sectoral analysis, a look at the Bank Nifty over here suggests that the Bank Nifty is also inching close to its own resistances, which is close to that 25,200, 300 kind of zone. And over here also, like we saw in the Nifty weekly chart, we do tend to see that the momentum kind of slowing down a bit with the price momentum relationship over here in this daily chart of Bank Nifty. So banks have the trend behind them, but it's slightly slowing down momentum. Weekly charts we can clearly see is way too underperforming compared to the Nifty. And the 75-minute time frame of the Bank Nifty clearly suggests that we are in a pennant, or you can call it a symmetrical triangle also. So this guy is also on the verge of a breakout. Will it be an upside breakout or will it be a downward breakout? That of course price will confirm, but if it's an upside breakout for the Nifty and the Bank Nifty, then within the Bank Nifty, which are the stocks we should look at? Apart from Bank Nifty, which are the sectors that we should look at? Before we go to the RRG charts and the view on other sectors and stocks, I would say the overall call on Nifty should be cautiously bullish. I use the word cautiously because it's dealing with serious resistances at 12K. I use the word bullish because it has proven itself exceptionally well that the trend is really strong. So it's far more easier for the price to continue rather than reverse. In terms of levels, 12K of course is no brainer. And on the downside, the first level would be close to the previous lows, which is 11,700, but it's the 11,550, 600 zone, which I am more confident on as a zone of support. So stay cautiously bullish. And if that is the case, and if 12K is taken out, let us now take a look at the sectors. We're here at stockcharts.com, and we'll go to the NSE sectors and we'll take a look at the RRG chart. I will do a comparison with Nifty. First, let's take a look at 1 minute, 1 week's performance. Sort in terms of price change. So it's the real estate, which has been the gainer, followed by metal, Bank Nifty, private banks, PSU banks. Again, a very, very interesting fact in this weekly performance is a mix of tails, which are the gainers. We have improving sectors, we have leading sectors, we have lagging sectors, we have weakening sectors. So it's kind of all mixed up. We don't have a weekly movement in the market which is clearly overshadowed by any particular sector or sectors which are leading or improving. It's mixed. So we cannot take up any confirmed view from the weekly performances. However, if we look at a slightly larger picture, which I think RRG charts are more useful, and let's say if we take up a 12 to 13 weeks, let's say we'll take a 13-week view, then if I sort in terms of the tail, the IT is still the outperformer sector, followed by the small cap. Media is not much except Z and PVR, and then the mid cap. So mid and small caps are outperforming, or they're still in the leading zone. If you recall, week after week, we've been talking about private banks, financial services, and Bank Nifty, all of them being in the improving quadrant. And from the improving quadrant, the flow is always towards the leading, which means if the market goes up, these guys will go up more, or if the market falls, these guys will fall less. This is what it ideally should be going forward. So if I combine these two thoughts together, then an anticipated breakout above 12K for the Nifty and an anticipated breakout of the symmetrical triangle we saw on the 75-minute charts of Bank Nifty can confluence for an upside breakout for both the bank Nifty, the financial services, the private sector banks, and the Nifty, with a little bit of support from IT, etc., can help us give a breakout above 12K. There might be some other stocks. In the weakening, we have auto, though it has relative strength, it's just weakening. So these are good short-term buy on a dip candidate. So is metal, pharma. FMCG has been weak for quite some time and it stays so. We've been talking about PSU Bank from an improving has completely come down. The private sector banks have picked up really well. This is energy primarily due to the underperformance from Reliance and OMCs. So it's a clear cut, I think, from at least this. We'll take a look at the individual charts also. That IT along with banks and auto, I think so. These are the three sectors which can give us a good move going forward if index breaks out above the 12K mark. Now, if that is to be the case, and if we look at the RRG chart of the Bank Nifty, then the ones that stands out is IndusInd Bank, IDFC, RBL, Bank Baroda, Kotak, State Bank, Axis Bank, ICICI Bank, Federal Bank, and HDFC Bank. If you honestly ask me, my interest lies in the improving sector, this bits. Especially Kotak, State Bank, Axis, ICICI, Fed, as well as HDFC. And I think to some extent, though it's in the lagging, Bandhan Bank. I'll quickly take a look at these charts and try and figure out which one stands out best for us. These are the three river system template that I have. Axis Bank is in an uptrend. It's hitting the banks. Ideally, it should come off. So Axis Bank, I don't think is going to break out, but buy on a dip. It's stretched. Bandhan Bank is already giving us a dip. Bandhan Bank is kind of a range-bound stock right now, but this guy is a breakout candidate. This guy can give us a breakout above that 330, 335 zone. Bank Baroda underperformer. I am not too hopeful about it. Federal Bank given us a beautiful breakout, slowing down. Let it enter the river. Buy on a dip, just like Axis Bank. HDFC Bank creating divergences with price and momentum. It hit outside the bank. Now it had entered inside the bank. Typical M-top kind of a situation. Let it cool off a little bit. This stock matters a lot. So we will wait to buy HDFC Bank on a dip. Same approach goes for ICICI Bank. IDFC first, similar to Bandhan Bank, is retesting its resistances time after again. Typical breakout candidate. So stocks like the second tier banking stocks, IDFC, Bandhan Bank, seems like to be the breakout candidate. Same with IndusInd Bank. So IndusInd Bank, Bandhan Bank, IDFC, breakout candidates. Axis Bank, HDFC Bank, ICICI Bank, buy on a dip candidate. Same with Kotak Bank. So hold on. So we're looking at a situation where the banking stocks which matters to the Bank Nifty and the Nifty are a little stretched and they should be bought on a dip. We don't see a runaway market. It can run away. It's just that normally it should come down and we should look to buy on a dip. On the other hand, the next tier of banking stocks like Bandhan, IndusInd, and we also took a look at IDFC first, typical breakout candidates. Very interesting. Let's take a look at State Bank of India. How is it possible that we look at Bank Nifty and not talk about State Bank of India? Very important. RBL Bank, similar to the other three banking stocks, typical breakout candidate. Look at the width of the river. It has become really shallow. This is a sign of a squeeze, a volatility contraction. Again, a breakout candidate. And then State Bank of India. This stock from the PSU banks can matter. It's moved into an uptrend. It's likely to slow down. So Bank Nifty and the banking, if it has to perform, if it has to give us a breakout, and if it helps the index breaks out above 12K, I don't think that's shaping up really well. Maybe we have to look for help from IT or some other sector. Why do I say so? Because the stocks that matter the most have already moved up. So they might be looked to bought on a dip. And the other ones which don't have a great weightage are the ones which look ripe for a breakout. So Bank Nifty may not be the key performer if the index wants to break out. It might help once the breakout comes and it slows down and etc. Then maybe the IT, or there's something what I feel, if you take a look at IT, most of them, all of them will be in a well-defined uptrend. Most of them will be dipping down inside the river, and they will give you buying opportunity, especially stocks like Mindtree, which has, anyways, that doesn't matter too much to the index, but stocks like TCS. Look at how beautifully it has entered the river, the mid-run, and now I think it is all right for a quick bounce back. So IT, I think, will support. But apart from IT, I think there's one stock which always matters to the index, and when the index needs it the maximum. And that is this one, Reliance Industries. Yes, it has slipped into a downtrend. Yes, it has dragged the energy sector, the index down. But if you notice the fall, which has been quite a bit for Reliance, 200 odd points, maybe a little more than 200 odd points, it's not mattered too much to the Nifty per se. And now it's back to its previous congestion, it's back to its support. And I feel that if the index has to break out, it's the Reliance which is likely to give us a move. It's around 230 to 2113, 2113, let's say 2100 kind of odd levels. I think a 100-point move kind of is possible if the supports hold well. So it will be interesting. The rest of the sectors, rest of the stocks, yes, Petronet has moved into an uptrend. The OMCs are struggling. Gas authority is also not doing that great. So overall, I think from the sectoral point of view, it's no-brainer that Reliance is the one that can take it away. A bit of support from the second-run stocks, a bit of support from the IT. Overall, I think Nifty will attempt for a break above 12K. I'll say maintain the view of cautiously bullish, and we'll see what is in store for us for the next week, for the next 5 trading sessions. All right, thank you. That's the take on the sectors and the Nifty and Bank Nifty. We'll continue with the rest of our mentorship session like we always do. Thank you.